Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic, trading price patterns. I am your host, Kevin Horner. Thanks for being here today, everyone. We can say hi to my friend Brent Moores, who joined me this morning for Trader Talk. He's managing the chat for me during this discussion. He'll get to questions that I'm unable to get to, but of course, happy to hear from all of you as we work through this discussion today. Get some ideas, some actual scans that are going to be utilized today from the Thinkorswim desktop application, some scans that are pre-built, that I've created to look for opportunities that might be retreats, retracements, pullbacks to major areas of potential support, depending on a couple of different time frames, maybe some breakouts as well. So we're going to utilize scans a little bit today. Those scans are going to be scans I'm able to share with you as well. So if you're getting this as an archived view, check the show notes down below, as that's where you'll be able to locate these scans. And of course, for those of you live, you'll find them in the chat. I'm going to share them as we go through the process here a little bit, and then kind of provide some teaching moments along the way, right? How to use the scan, set it up, etc., but also build that dynamic watch list, which is a very simple task available to us here in Thinkorswim. So with that, let's get started. One quick reminder before I move it into disclosures, follow Brent and me on X. We would greatly appreciate that. It's the best way to engage with us coaches outside of the classes that we host for you. So if you follow us there, Kevin Horner CS or Brent Moores CS, you'll see that we post there throughout the week, but your replies and your ability to engage with us that way is really solid. So please do follow us there. All right, please remember, our conversations here are only informational and educational. Simply put, we're not making recommendations for a particular approach or strategy to trading the market. We're just trying to give you some ideas that you can incorporate if you choose. We do discuss technical analysis today. A lot of what we'll cover is going to be tied to price action, utilizing major moving averages and trend analysis. However, while we do it this way, we want to remind you that technical analysis, like any piece of your investing and trading puzzle, should not be the sole means of your basis for buying or basis for selling. So consider the purchase of securities, the sale of securities should be incorporating multiple pieces of data and information as you do it. So even though we tell you not to base decisions exclusively off technicals, I might suggest not to base decisions exclusively off of just one concept or one piece of data. Today, our agenda is pretty standardized. I do have a quick announcement. We're going to show you the upcoming calendar of event opportunities for you. We'll do a quick market overview looking at the S&P 500. It's already been a little of an interesting day. And we're going to go through some scans and play some example trades here as well based on those scans. So part of that discussion will involve how we decide to just how many shares we might be purchasing as well. So all of that is what you can take away from today's conversation. Like I mentioned earlier, we go about 45 minutes in total. This weekend, I will be out in Miami for our upcoming Market Drive event. Shortly thereafter, a couple of weeks later in New York, we'll be hosting the Market Drive event. And then in New York, we're doing a workshop on August 8, August 9. I'm bringing these to your attention to remind you that we offer two separate types of events. The Market Drive is a little bit more built on the concept of where are we in the market today? What's happening in the market today? What are the narratives and details that traders and investors alike need to keep in mind? When we talk about the New York event in August, as an example, this is going to be a workshop. And those workshops are where we ask you to come out and visit us, but bring a device. We provide you power at your chair. You get set up with Wi-Fi. Obviously, you get your refreshments in the morning, your lunch in the afternoon. But the benefit here is basically getting into a face-to-face live interaction, very much akin to what we do for you here on YouTube, only with 400 or 500 of your closest friends. So we would love to have you joining us, everybody. Check out and bookmark that schwab.com/events location. All right, let's jump into the S&P 500. Whoops, there we go. It's been a bit of a day today. We've had a favorable start. You'll notice that we are dabbling as we speak with the move between a red and green doji, which tells us that we are in a bit of an indecision day. We are basically at the price at which we opened today. And so the open trade was 6,049 and 38 pennies, and we are at 6,049.24 at the moment. So as we are below 38 cents, we stay red. If we're above the 38 marker, then we turn to green on this chart. So the question now, of course, is, was today's CPI sufficient to push our market higher? Given that we've not seen a more pronounced move to the upside, some are suggesting that this is merely a pausing opportunity, maybe digesting the cooler CPI and the potential for a deal with China into a more potentially a sideways consolidation. Remember, not all pullbacks happen in the form of price. We can get a pullback that just moves sideways where we aren't moving trending higher necessarily, but we're just, I'm going to use my favorite word that many of you who watch these shows know, we meander sideways, right? We just kind of migrate slowly to the right as time passes. And what that allows us to do from a trend standpoint is bring these speedier moving averages like the 20-day into and beneath our major areas of support. There's one here at the prior highs we've been talking about. So some traders are going to look at this, and you'll notice that the 20-day isn't too far away from that level, right? And if we were going to go a level below it, we would have to probably go back to the gap zone from May 12, where basically the bullishness got going in earnest on this gap move from the Friday the 9th into Monday the 12th. And, you know, if we were to devolve out of our 20-day trend and trade below it, some traders would tell you that the sideways opportunity in here provides the most, maybe the best view of maintaining bullishness without breaking down. We would certainly be looking to maintain and hold the 200-day moving average in blue. Would that occur? But moves backward or lower than the 200-day, which today is just around 5,800 here, that would be a departure from what we've seen. So could we break the 20-day and still be okay? Yes. Could we break the 200 and theoretically still be okay? Well, in truth, yes, because, I mean, as an example, what if we broke the 200 and found ourselves at the 50? And if we found ourselves here and this became our target for a bounce, that would still be a clearly higher low than the last time. So while the manual trend line I can draw could be said to be at risk just simply because it is so steep, even if we broke the trend line, even if we broke the 20 or 200, the opportunity still exists for a higher low. Now, as traders, it's our job to know how we want to attack the market if this plays out this way, right? So if you've been a buyer in the S&P all the while, maybe you sell a little on a move or a close, most specifically, under the 20-day. Some traders would say they'd sell more under the 200-day. And then further, some might say, you know what, if we gave up all three major indices, I have no choice but to be out of my trade entirely, because now I'm at risk for making a lower low in the intermediate time frame. So there's a number of stairs along the way. Our hope is that if we do break down, we visit them as stairs rather than escalators or elevators that get us there very quickly. Commonly, we see our upward movement looking like this grind higher, where our sales come in a bit more aggressively. So inevitably, my reminder to all of you is to always be prepared for what you don't think can happen, and make sure you have a plan for how you're going to address your long holdings in the S&P or whatever indice or group you're watching here, should things change, right? Should things shift? That's the key component from a trader mentality and the approach that a trader's trying to work with, because the goal is definitely to preserve capital, and one way to preserve capital is to sell as the market gets a little bit weak. Okay, that becomes a much easier process, obviously, if you've got the playbook in front of you. You're looking at your, what I like to call, for those football fans out there, you know, Andy Reid looks at that huge Denny's menu, right? If you're going to use a Denny's menu to define how you're going to approach things, just refer to it when those things happen, right? And that's exactly what the play caller of a football team is doing. He's looking at the situation. He's already given himself the steps. He knows exactly what he wants to do. He's just picking the right play for that current scenario. And that's what ultimately planning our trades out will do for us. That's a brief look at the S&P. Obviously, we're maintaining green, so not as bullish perhaps on the cooler CPI as we might have been hoping for, but nonetheless, this at this point does not appear to be in the midst of a breakdown or a pullback just yet. So let's talk about some of the scans available that are scans that I have pre-built, pushed into my scan tool here, and I have already loaded as watch lists along my left-hand rail. So in the gadget zone here, I've got my standard market watch list, but I've also got my uptrend and oversold, uptrend breakouts with volume. I've also got uptrend and oversold based on given moving averages. So let me walk you through the concepts that we're incorporating here. I'm going to start us out with uptrend and oversold. So what I'm doing is moving into my loading query, and I'm going to go to my personals and look for uptrend and oversold. Now, the way that I have saved this uptrend and oversold scans within the S&P 500. So I'm just looking at those 502 stocks, I think it is. And this is the criteria that I'm making note of. Let me share this screen. Here we go. All right, so I've got stocks. They have to have average 50-day volume of at least 500,000 shares. Okay, so that's number one. Number two, I want the 10-day simple moving average to be above its 50-day simple moving average. And ultimately, that implies that we've got a stock moving well in the short term. Remember what 10 days represents. A 10-day moving average is a 2-week long average price, right? But a 50-day moving average is a 10-week long average price. And so when you have a shorter or faster moving average above a longer term moving average, you could be considered to find stocks that are already in an uptrend. Similarly, easy for me to say, we are going to show stocks whose simple moving average at the 50 period level are above the 100 period simple moving average. And lastly, we're looking for stocks whose slow stochastics, or slow K, is less than 35. Okay, so that implies that we are in, from the stochastic viewpoint at least, an oversold condition. So let's go ahead and scan it real fast. Okay, now reminder, I've said S&P 500, but if we wanted to be very detailed, we could go into industry groups and say, show me industrials. Industrials are actually our leader on a year-to-date basis as of yesterday's close. And we could just say, show me the S&P 500 that are industrial stocks that meet this criteria. And our list of 30 will get reduced by a decent amount. Let's see, we're down to 7. Okay, but I want to show you over here what I've done with my watch list. So here I've gone into the exact same criteria. So just hitting the drop-down menu, going into personal, and you'll notice over here, everybody, I've got these uptrend, oversold, 20 DMA, or uptrend and oversold. And I've got a number of these, but what I want to bring your eyes to are the pink bullseyes. This lets you know that these are dynamic watch lists. That means it's utilizing the screener criteria that we've created, and it is feeding me the list of stocks that meet that criteria at any given moment in time. Now, in our case, we are merely scanning the S&P 500 on the daily chart. So the price action that matters to us is how it appears relative to the daily chart. But that is not a requirement for you. We're not going to go into that detail today, but I will just highlight that if you wanted to do intra-period opportunities rather than relying on the daily look, you could absolutely do this over any other window of time intra-period that works for you. Okay? I'm certain that we've got some classes that will go deeper in this. Unfortunately, it's just not one I'll have the time to work through with you today. So we're going to do everything based on a daily look. Now, as I noted here, I've intersected with industrials. My saved version is not intersected. So it's exclusively the 30 that we located that are considered to be uptrend and oversold in the S&P 500 by these 4 basic criteria. Okay, so let's just jump over and let's see if we can learn anything here real quickly. So here's the number one. This is just, I'm sorting, I think it's all alphabetical here. So this is not thought process. There's nothing going on here, everybody. But I'm just going to use my arrows and just navigate down. What we're likely to find are stocks that move from the lower left to the upper right with an upsloping, the slowest or longest moving average. The blue one there is the 200-day simple moving average. So here is Gallagher Arthur, AJG. Interesting spot for some traders, right? It's tagged the 200-day moving average today. Doesn't mean it has to hold, but when you notice that it has not just only traded to the 200-day, but bounced off the 200-day, some might say, hey, I think that's an excellent chance. The last time we were close to the 200-day, the stock pushed and rallied 25%. What would that look like from here if I could rally 25%? It would look a heck of a lot higher. I mean, a 15% rally from here takes us up to 356. And I mean, sure, we would probably be thinking about a bounce that could take us into the last highs initially. And that might even be worthy of a trade for some traders, right? Because, I mean, that's a move that's still 11.5%. So from a risk reward standpoint, the trader who says, I want to be long now for the chance to go back to 340, 345, some traders would then make sure they've got an exit strategy or a process by which they would move on from the trade under the lows we may have created today by some amount. So that would still give, as an example, if they decided to exit at 307, about 8 or 9 points of risk, right? For the opportunity to potentially make 30 to the upside if you think it's going back to the peak. So that's one way to think about it, one way to look at it. Again, this scan in particular is just generically looking for stocks in that uptrend. And I guess I should also point, let's go ahead and add in my stochastics here so that we can at least validate the idea. So there's your slow stochastics in red. So this is everybody, what this is doing, everybody, rather, is the scan is showing us if it's under 35 in the red line, that could be considered to be oversold from the stochastic view. Doesn't mean, of course, none of these details mean anything definitive, as you all know. We're just simply looking at probabilities, but that's one way to think about it here on Allstate. Having found the 200-day moving average, having found a pretty significant move to the stochastics getting under even the 20 level here, as opposed to the calculation we're looking for, which is under 35. Great reminder, Villager. Thank you, of course. Some traders aren't going to look at that AJG and say, Kev, I can't wait to be long that because I need some confirmation. And you would be fine to be a trader who's waiting for some semblance of confirmation, right? So how many of you want a piece of confirmation? Some, maybe all. What is that confirmation for you? For some traders, it's maintaining the moving average, and that's enough. For others, it's using today as the potential low trade in this pullback, and then allowing the subsequent day to pass and close. And if the subsequent day to today, tomorrow, closes above today's high, then they might get started on a trade, right? They get the hold move, and that could be their first confirmation. Or they say, you know what? I don't want to be in a full position on a hold. I'll take a 25% position on a hold. And then if it continues and I'm up X percentage, let's say I'm up 5%, I'll add to it. If I'm up 10%, I'll add to it again. Again, this is not me telling you the right percentage for you. It's reminding you to define that for yourself and put that in your playbook so you know exactly what you're going to do when the opportunity arises. Yes, I'm going to go ahead and bring the scan in here. So once more, uptrend and oversold. Let me go ahead and share it with you. And I'll place this, as I mentioned, if you didn't see it at the top, I'm placing this in chat. And then I will also place these scans in the show notes for the archived version as well. Please know that our scans, these are not guaranteed for accuracy. They are not a guarantee of, certainly they're not a recommendation for use, and they're also not guaranteed for the timing either. So keep that in mind. Sometimes, the criteria will create minor issues here and there. It does happen. Nothing is perfect. They're for our education and info as much as anything else. Thanks to my man Brent for getting that into the chat as well, that disclosure helping us out. So consider it, play with it. Again, I found for me, the way that I got better at scans was by taking a predefined scan from another trader and then playing with its customizations and then scanning again, seeing what I learned and learning about what I can get from a customized study, how to build that customized study. And if that's something more you're looking for, do use the Schwab YouTube coaching channel and search for specifically scanning in Thinkorswim, where we can delve in much deeper in a class where we're fully devoted to the scan tool. So that's what we're looking at here on uptrend and oversold, okay? And again, we're not going to try and dawdle on the lists themselves. I really wanted to highlight the benefit that can be achieved through simply scanning the market and looking for ideas in such a way, but more conveniently using the watch list over here on the left. Such an easy way to do things. Next up, I've got the uptrend breakout. So these are stocks that are already in an uptrend with a series of higher highs and higher lows, but are in the process of breaking out to new highs. So let's go ahead and load that one. Uptrend breakout with increasing volume, okay? Now, why increasing volume, everyone? Well, the thought process here is that if we've got stocks moving to new highs and volume in the short term is increasing as we break out, that can be considered to be validating the breakout. Many traders want to see that volume. Volume can be considered to be rocket fuel for the stock itself. If you've got no volume, but the stock is moving to the upside and volume is weak, well, then it stymies the opportunity for that breakout to continue. Whereas bigger volume, or volume that could be considered to be validating in nature, could be the fuel that propels the stock's price even higher. So here, let's look at our criteria. We've got the simple moving average of 15 period that is above a 50. We've also got an RSI criteria. Here, we have played with the relative strength index. So what we're relying on now is a 10 period, 2-week RSI. Remember, the default is 14 periods for the look back. Here, we're asking for a 10-day RSI that is greater than a 30-day RSI. So we are seeing relative strength within the trend of the stock itself, not the rest of the market, but the trend of the stock itself, that is better in the short term versus the extended term. So the last 2-week RSI better than the last 6-week RSI. Additionally, we are asking for average volume of the last 5 trading sessions to be greater than the average volume of the last 20 trading sessions. Same thought process as it relates to the RSI, to the moving averages, right? We want to see short-term detail improvement better than the longer term. And then the last criteria here, we're just looking for stocks that are making a 20-day high. So that doesn't mean they're breaking out to new all-time highs, but it might mean they're breaking out in the midst of a shorter-term trend that is the highest it's been in the last month, 20 trading sessions, okay? So there are our 4. We scanned exclusively in the 502 S&P 500 stocks, and here they are for the 4 of them right there. So let's just look at how these charts might appear, everybody. Let's look at KLAC. Well, you do have it moving to new highs, right? New short-term highs for sure. I'm going to hide my slow stochastics in this one since this is not part of it. But, you know, where did the breakout really occur here, everybody? Some might say it was the break of the downtrend line. Some might say it was the break of horizontal resistance. Either one would have been an adequate decision given the move that's occurred since. And you'll notice down below, everybody, if I just increase the size of my volume bars, you can clearly see that volume in the breakout has been substantial. All right, look at back here, a little bit upward for sure, but spikes like these are what we're talking about. Big, big spikes. And if you want to see maybe a better way to give you some confirmation of volume being greater than the average, you can go into the study here, I think. Let's do, yep. And we can do a volume average, and this defaults to 50 days. I'm just going to place it in my volume pane up here, and that way the average line will run through my volume bars horizontally. Let me show you. Okay, the width is 3. There it is. So there's my average volume line. You see that horizontal? Let's change that. That color's terrible. Let's make that volume average. Let's make that white. All right, so now you see how that's the 50-day average of volume. We could change that to the 20-day, of course, and it would be a bit more in alignment as it relates to our scan. But the big takeaway is, everybody, average volume it's not a problem to trade volume that's similar to average or what have you. But when you trade volume that is greater than the average, particularly in the midst of a breakout, it's not because you and me and my grandmother are the ones buying up CLAC here. It's because institutions are likely the buyers. Deep pockets, large dollars, right? Smart money, so to speak. This can be really instructive, okay? Look back here. This was a wonderful example. This stuff right here, these bars, again, so much bigger than the average bars. This is not stuff that's capable. We, retail average investors, are incapable. No matter how much we are on the same Reddit page, we are not going to be able to generate that amount of volume, everybody. So that's a great reminder and takeaway, because trailing the so-called smart money process for a lot of traders is one way, not just to generate ideas, but to find themselves working with trades that are in the process of playing out favorably. Doesn't mean that's going to work 100% of the time. Even the smart money gets it wrong periodically, but that's why we incorporate our management techniques, right? So when I look at CLAC, having made the move it has, and having pulled away from its 20-day moving average, many traders would tell you they can't justify a trade just yet because it's completely broken out. But if we'd have talked about this on Friday, might have been an initial starting position. Let's check out Micron. Now, this is interesting too. We are above some areas of former resistance. We've been tagging the 200-day pretty darn consistently here. My goodness. What was that, like 6 or 7 times? There's a couple, but even before these, we had been tagged. We were through it, but not for much. We did need to, not for long, excuse me. We did need to get through horizontal resistance here. And this is kind of notable because this means that is we have now pushed Micron to the highest we have seen since last July. So you're looking at a 10-month high there, everybody. That might be notable. Some traders might get started on something like this. And I say get started because they're probably not thinking about a full position. Because when you look at the trend, where would you find true support here all of a sudden? Maybe the breakout spot back here? Maybe the 20-day moving average? But the 20 days at $100 a share and we're at 116. If you want to be a buyer here, you probably want to keep it small, right? Because your risk is that we pull back to the 20-day or maybe a faster moving average, maybe the 10-day, and then we get a bounce. But if that pullback occurs, Are you going to be comfortable holding 100 shares at 116 that takes you back to 100? Or would you rather own 10 shares at 116? And then at 100, you're sitting there going, okay, now I would really love to be adding some shares to my trade here, right? That's one way to think about it. I don't think it's a possibility. You can be a buyer right here, sure. Let's see if either of these stand out a little bit more. Well, day one, potentially on Palantir. I see I wasn't alone in finding that one here. Yeah, Sia, you're right. Breakout. Let's duplicate that line. Go. So you're in at around, let's call it 119, 133. Yeah, 133, 134. That's about a 15-point range, everybody. That's kind of intriguing for some traders, right? Why don't we consider buying this one as an example trade for a potential breakout? And I'll just call out the volume down below, everyone. We've had good volume. Today's volume, we still have 2.5 hours in the session, and we already have volume that is pretty close to equal to yesterday's volume. So that's a pretty decent indication that today's going to have a strong bit of volume. We don't know if it's going to exceed the average of the 50-day volume, but nonetheless, it is breaking out, and we can certainly do an example based on this. Now, if we were to do the example that believes that the breakout is occurring and we don't want to get thrown back into the range. Good question. I'll answer it momentarily, Isaiah. Yes, if we don't think that the getting back into range is likely, well, then we want a tight stop here. We want to maybe consider a stop below today's low or potentially yesterday's low. And that would put your risk at around, yesterday's low would be about just shy of 130. So that'd be about an $8 point of risk. And if you think it can make 15 to the upside from 134, you might be looking at about 149, 150. Why did I say 15 to the upside? Well, it's just the height of the range from which we broke. So if we broke a $15 range, many traders would just add that $15 to the breakout level and make that an approximation for a measured move target. Again, measured move targets are never guarantees to be achieved. Now, Isaiah's question about buying at all-time highs. Yeah, not everybody's comfortable, and I get it. It is a difficult thing to be a buyer at highs. The question isn't, am I buying it at the right price? But am I buying it today because I believe I can sell it at a higher price later? Is there truly anything wrong with buying high and selling higher? The answer to that is no. If your goal is to be profitable, the only thing that matters is buying it at a price you believe is undervalued in the current environment so that you can sell it at a price that you hope to be overvalued in the subsequent environment, wherever that is, hours later, days later, months later, right? And I recognize, Isaiah, this is a difficult process, but breakout trades and the willingness to exit those breakout trades can be a worthwhile opportunity for a trader willing to take on that risk. Now, again, in our discussion, we're bringing into light the idea that we need an exit strategy. We need a stop order beneath us to manage our risk, to mitigate the opportunity to lose money on this trade. But we could easily do that with a bracket order, which we could set up right away. So let's do a quick example. I am going to answer your question here about this selling, short call vertical for higher probability. Nothing wrong with that. This class, however, we're not going to delve into options today. Of course, many traders think of long equity strategies with owning the stock akin to selling vertical calls or maybe even selling some put strategies. You have a lot of concepts to consider. Today's is just not going to get into options, and recognize plenty on the YouTube channel that can work to answer those questions, and certainly give you some archived videos that'll take you through that discussion. Again, we as traders, we're all very, very different. Some of us want the enthusiasm of opportunities here, right? You want to take advantage. And gosh darn it, Daryl, you're absolutely, Bob, you're right. Excuse me. I mean to say, Short call vertical is not a bullish strategy. You're looking to capture premium, and you would do so when the stocks retreat. So if you are not believing in the breakout, that would make more sense. Thank you, Bob, for bringing this in. Short put vertical, selling that concept where it is a bullish strategy, where you're selling strike prices below. You would believe the stock is going higher in that scenario. Let me share this scan with you all, guys. Get this out to all of everybody here in attendance. Here we go. So again, this one is the uptrend breakout with increasing volume. And we'll just remind you once more, not guaranteed for timing, not guaranteed for accuracy, and not a recommendation for your use, but an example. Let's do the trade. We're going to go with yesterday's low, and we're actually going to look at the 20-day moving average, which is at 127.64. So in our example, I'm going to do a buy custom with OCO bracket. That means one cancels the other, and that simply tells me that I can't sell twice, right? So I'm going to be a buyer. Make sure my account balances are working. Okay. Buyer of, let's do 100 shares, and let's be a buyer at market, but with a stop exit at 127. And some traders like to set their level as a round figure like this, and then decrease it some pennies just to get into a non-round figure amount. Needed my stop to be at a good till canceled. And then we're going to put a limit out there at 149 as an approximation. So what this is going to do is get us into the 100 shares right away. And then we're going to have a target to sell the 100 at 149. If we get there at any point in the regular session, we will liquidate at 149 and take a nice bit of profit and be happy about it. And if not, if we drop down to 126.88 and trigger, we'll get sold out. It is a market order to sell once triggered, everybody. What that means is we have some semblance of risk. It is a gap risk. That means that if we closed above our trigger at 126.88, but opened below it on the next day, we could open well below it. And we're going to have a market order to sell, which means, if we opened at 120, that would be the trigger for our stop, and we would be a seller at market thereafter, which means we're going to be triggered. We're going to be selling at market pretty close to 120, not likely close to our stop at 126.88 as an example. So this is the example trade. I always like to make sure we read through it, buy 100. We have a subsequent sell 100 at 149 limit, or a sell at a stop of 126.88, which once triggered becomes a market order and thus no guarantee of price. And there we go. So we've got our example Palantir trade. We've got it bracketed. The hope is that we can walk away and just let this trade go, right? It can do what it wants to do. And if one of those levels gets met, then the trade ends. It's a very common approach that a lot of traders are utilizing these days because it enables you to walk away and just know that you're relatively protected. And I say relative again because it, once more, stop triggers and becomes market orders. So no price guarantee there. Volume average. I'm looking here at your question B. Mine is volume. But the bars look different. So I'm thinking, so first of all, volume, average volume, just make sure when you go to customize, click off here. Volume is the first bar. Click on volume average to change the line, that horizontal line. Anything that you're utilizing otherwise for volume is going to be part of the gear here. And if you go to equities and you have volume here, this is where you would get this change. But if you were wondering about the colors associated with volume, you'll find that down here under common. Notice I've got color my bars that are the same symbol, same color as my ticks. So bullish day green, bearish day red. That's what appears here. The default is just the standard color like this, but I don't like that. I want to see, is it an up day? Is it a down day? All right. Let's look at one more scan at least. I have uptrend and oversold. And this one of these at least, I've got a few of them, but uptrend and oversold, I'm going to show you. I've got three. uptrend and oversold with a test essentially at the 20-day moving average, with a test at the 50-day moving average, and then a test at the 200-day moving average. So let's just use the 50-day for our purposes here. Again, we are scanning within the S&P 500. And over here, I'm going to make sure that my list is that one. So personal, uptrend, oversold, 50-day moving average. Okay, so that's that one. Okay, now the criteria here. Let's take a peek. We've got average volume in the last 50 days greater than 500,000 shares. We've also got a 10-day simple moving average above a 50-day. Again, uptrend, a 50-day above a 100-day. Also, slow stochastics under that 35 level, and that the last trade or close is above the 50-day simple moving average. I'm going to highlight this by clicking on this so you can see it. So the close is greater than the 50, but the low is less than the 50. Okay, so that's how we get it to tell us that this is testing a 50-day simple moving average. So let's see what we got here. All right, our lists are valid. All right, CBOE. All right, look at our action right now. Intraday, this list might not look the same in an hour or 5 minutes, right? Because CBOE is above the 50-day right now. You throw up that stochastics once more. See, the stochastics under 35. Okay, here's core, COR. Tested below the 50, working its way back up the 50. Might be a hold move day today on COR. What about Hartford? Ooh, tagged the 50 on the nose. Low today was below the 50, bounced off of the 50. It's a green candle. That means our last trade's above the open of the day. Our stochastic is oversold. Reminder that just because it's bouncing doesn't mean it has to be an entry, right? For many of you, you're waiting on some semblance of confirmation. Maybe it's the actual crossover like this that you see in the stochastics. Maybe you're waiting for that stochastic to cross to the upside like that. Okay? Eventually, that's going to happen over here somewhere. So some traders might wait for that. Others might wait for that close above the high of the low day, right? So let's go ahead and get this scan in there for you all. So I have shared all three of the ones we have discussed today, everybody, right here in the chat. And once more, I will make sure to get all three of these shared scans into the show notes that are available. So if you are watching in archive, check that out. Make sure that you note those there. Again, all scans, not guaranteed for accuracy and not guaranteed for timing, and are not a recommendation for your use. But here's another one. Philip Morris, or formerly Philip Morris, Altria Group, bouncing off its 50-day. The low today was right there. RSG, same thing. So clearly we're seeing that this scan is working to locate that. And once more, you know, I built these out so that it's simple. I've saved them as such. But if you said, yeah, I'm only saving, Kevin, you only shared with me the 50-day one. Well, then just come in here, click that little pencil so that you can edit it, and then do the edit here and tell it, yeah, I'm looking for the close to be a greater than the 200-day simple moving average, right? Or maybe the 30-day, whatever it is you want. Just get comfortable with taking a pre-built scan and playing with the criteria a little bit and seeing if it can give you what it is you're looking for, right? This effort is really the key. And I hope you take what you're taking away is, man, I really can spend a little bit more time locating opportunities. We tend to get siloed. It's really easy if you find yourself watching what we do here on the channel, we fall prey to it as well. It is all of our job to find those opportunities, but we don't have to trade what everybody else is trading. Crowded trades can prove to be a little difficult from time to time. But I hope today's conversation kind of opened your eyes a little bit to the concept of using the scan, but also incorporating existing uptrend analysis, trying to be a buyer at what many traders consider lower risk areas, areas of trend support. That's ultimately what we've covered with you all today. Big thanks to my friend Brent Moores here. I feel like he answered quite a lot of questions for many of you today. I don't know my next opportunity with you in this class, but I nonetheless love hearing from all of you. If you follow me on X, feel free to reply to any of the posts in there. I'd love to hear from you that way. And as always, a big thanks to Brent, and thank you if you hit that thumbs up for me down below. That'll help us out in the archive. So for those of you in Miami that are going to the event, I can't wait to see y'all. But thanks for being here today, and I look forward to catching up with you all again real soon.